Nvidia is no longer being valued like a semiconductor company. It is being valued like the central infrastructure layer of the AI economy. That is the real shift. The business is still exploding, margins remain elite, and demand has not cracked. But at this size, Nvidia is no longer proving it can grow. It is proving whether AI spending can stay extreme enough to justify becoming one of the most important companies in the world. This business is still operating at a level most megacaps never reach. Fiscal first quarter revenue hit $81.6 billion, up 85% year over year, with data center revenue at $75.2 billion, up 92%. Hyperscalers remain massive buyers, but growth is broad beyond just cloud giants. Networking nearly tripled, showing Nvidia is selling more than GPUs. Gross margins remain around elite levels even after some compression from Blackwell ramp costs, and operating margins remain extraordinary. Cash flow is still extremely strong, and balance sheet risk is minimal. The core message is simple. There is no visible AI infrastructure slowdown yet. This is still an expensive stock in absolute terms, but not irrational if Nvidia keeps executing. At roughly $223 versus Morningstar fair value of $280, the stock looks undervalued only if AI capex remains structurally high for years, not quarters. The current business already justifies a premium because margins, dominance, and cash generation are exceptional. But future expectations matter more than current earnings. A $5 trillion plus company cannot rely on hype. It needs AI spending, enterprise adoption, and sustained pricing power to stay real. If AI infrastructure normalizes faster than expected, the valuation compresses quickly. Nvidia is becoming a full-stack AI infrastructure company, not just a GPU vendor. That includes compute, networking, software through CUDA, interconnect systems, and now expanding CPU relevance. Strategically, this is logical because it deepens switching costs and makes customers depend on an ecosystem instead of one product. The risk is that this makes Nvidia even more tied to one macro theme: AI build-out intensity. If AI remains a decade-long platform shift, this is brilliant. If AI capex cools sharply, the concentration becomes dangerous. Nvidia is still ahead because competitors are not just fighting chips, they are fighting an ecosystem. AMD is the clearest semiconductor threat in accelerators. Intel remains relevant in broader compute, and hyperscalers like Google and Amazon are building in-house AI chips. Nvidia's real edge is CUDA, software lock-in, networking, and scale. Where it could lose is specialized workloads where custom chips outperform general-purpose Nvidia hardware. The company is strongest in AI training and platform depth, but long-term hyperscaler self-reliance is the biggest structural threat. The biggest risk is not weak execution. It is AI demand normalization. Nvidia depends heavily on a relatively concentrated set of giant customers. And if hyperscalers slow spending, optimize workloads, or shift meaningfully toward internal chips, growth could reset hard. Geopolitical restrictions, especially around China, also limit upside. Another risk is valuation psychology. When a stock is priced for continued dominance, even strong growth can disappoint if it merely slows. The thesis breaks if AI becomes important, but economically less profitable than expected for customers. The upside is straightforward. If AI infrastructure spending remains enormous and Nvidia expands from GPUs into the operating system of AI compute, this company could keep compounding at a level few large caps ever sustain. Success looks like Nvidia maintaining leadership in training, growing inference share, scaling networking, deepening CUDA lock-in, and converting AI adoption from hyperscaler-led spending into enterprise-wide demand. In that world, Nvidia is not just selling hardware. It becomes toll road infrastructure for AI. This is not a normal semiconductor stock anymore. It is a high-conviction AI infrastructure dominance bet. The business is elite, the moat is real, and financial quality is exceptional. But the stock only works long-term if AI spending remains durable and Nvidia stays harder to replace than rivals expect. This is for investors who can handle concentration risk, expectation risk, and volatility. If AI becomes the next industrial backbone, Nvidia stays powerful. If AI spending cools faster than the market expects, this stock gets repriced fast. Great business, very demanding thesis. I'll break down the next one soon. Subscribe if you want to stay ahead.